I'm Adele Jones. I'm the lead enterprise architect at Nedbank for blockchain and cybersecurity. Nice to be here.
Hi everyone, my name is Nkosana Malumba. I am the research and development lead at Rand Merchant Bank for our blockchain enabler.
Good morning or good afternoon, everyone. Unfortunately, my voice does not travel like Luisa's, so I need one of these devices to help me along. My name is Connie Bloem. I'm co-founder and managing director of Mesh.Trade. And in more interesting news, Luisa and I are very good colleagues as well.
Thank you, Connie, and thank you, everyone in the panel. Hi, everybody. My name is Luisa Mazinter, the Chief Growth Officer of Mesh.Trade, which is part of the broader 42 Markets Group. So we've got to try and get you to lunch a little bit on time, because I think that the conference is running over. I'm going to keep it really pumping. So I just want to start off by saying, and I'm timing us so that we get, because I know there are a couple of the people on the panel who have to rush to other meetings. I want to just say what you're looking at right here on this panel are the cool kids in banking. No aspersions to anybody else in the market. So what are we talking about today? We're talking about Web3, crypto, and blockchain. And the topic is the banking industry ready? What a question. So hardly a week passes by that you're not reading, if you are like us and continuously scanning the headlines for relevant content, about some new initiative or exciting new technology or new partnership that's happening in the blockchain space. But it isn't the sexy stuff like AI is and all Web2 was, so it's not really permeating into the market. But I think when you hear what our panelists have to say today, you're going to hear a very different story. I just want to tell you, and one thing I'm going to promise you, we're not going to get into the technical details like what is a blockchain. There are a lot of online resources. You can go and read up all about it. I just want to say that blockchain is going to completely disrupt and make the whole financial services industry more efficient. It's going to reduce the time things take, and it's going to make processes more efficient, and it's going to reduce costs, and it's going to make all of you, if you are brave enough to jump into this fray, certainly a lot more profitable. So, with that in mind, I just want you to know that the Boston Consulting Group, it's a recent study, which I'm sure our panelists have said, that the combined value of tokenized assets, and specifically they looked at illiquid assets that are hard right now to trade in the capital markets, will approach $16.1 trillion. Trillion, not billion. $1 trillion by 2030. And a very recent analysis that we just picked up yesterday from Galaxy Research indicates that the growth in market cap of tokenized real-world assets, which is what a lot of our panelists are going to share with you today, has basically grown 72% since January. So it has added another $1 billion to the market cap, just over $1 billion since January. So the market is nascent, it's really at its very, very beginnings, but the curve is steep and it is very exciting. There isn't a bank, global tier 1 or tier 2 bank out there who isn't experimenting in this space. So with no further ado, I'm going to kick off with, and I'm going to ask Ian, if you wouldn't mind kicking off this conversation, is how would you define Web3, which a lot of people talk about as the next phase of the internet. How would you define it in the context of the banking industry? And why should banks care about this new technology that's emerging?
Thank you. It's a great question and very important if you want to see how banks need to get ready for the future. The first thing, Web3 is the new version of the internet, and it's got lots of components in it. But the most important thing about Web3 compared to Web2 and Web1, you've probably seen this on lots of slides, is that it's decentralized. What that means, if you look at Web2 today, it's actually controlled by AWS, Microsoft, Meta, X, all those guys. They took the old internet, they monopolized it, centralized it. And if you think about identity, just to make it very practical, lots of people talk about digital identity. I listened to that earlier today. In Web3, identities are portable, so it gives you access to ecosystems. In Web2, you use your identity to access a platform. So if you do KYC at Standard Bank, you can use your identity to access Standard Bank, the app, and you can access all the financial instruments on it. So what underpins Web3 is quite a few very important components. So people talk about the metaverse. It's really happening, but it's a little bit off in the distance. So I think if you're a bank, you've got to look at what can you commercialize very, very quickly on blockchain. And that's what we're focusing on and what global banks are focusing on. If you want to participate in Web3, as a centralized entity, the most important thing is digital custody. You get traditional custody, you've got to have a core component to enable you to store private keys, store data. And a funny thing is, these things are basically quantum proof. It's always amazing. I spoke to Adele this morning. Why don't people worry about the existing servers of banks and the corporates that's central, that's not quantum proof? But when you talk about blockchain, people ask, obviously because it's closed versus open networks. But so that's something to consider in the future. If you have that and you can move in Web3 with a portable identity, you can access each ecosystem. You can access multiple platforms. Apple's releasing their Meta camera glasses next year. It's going to be about 70,000 rands. But everybody agrees it's going to make a significant change globally in the immersive Web3 experience. Finally, so blockchain or distributed ledger is a shared state. That's the main difference between Web3 and Web2. And that, if you understand this, you'll understand blockchain. In Web2, every entity's got their own private ledgers. And you've got to reconcile those things. I was CFO of Treasury and CIB for many years in Standard Bank. And I promise you all the banks in South Africa and the world works like that. So every ledger's got a whole army of finance, operations, compliance, regulatory, legal teams supporting that ledger and the maintenance of it. In Web3, it's a shared ledger which facilitates true peer-to-peer transactions. That includes institutional and retail. The custody and the digital portable identity enables you to transact across multiple platforms and ecosystems. And just the last definition I want to leave with you, the metaverse is an immersive combination of technologies, including blockchain, because it's also decentralized. You still get closed metaverses today. That means Standard Bank can appoint, people can apply for jobs at Standard Bank through its version of the metaverse, but you're going to use a Standard Bank ID. In future, you could apply for a job on a worldwide web that's immersive, and that's the purpose of the metaverse, not to get more people to use the internet, but to convert Web 2 into a very immersive experience. Sorry, I can talk for hours about the definition, but I think that's sufficient.
Thanks, Ian. And I think there was a lot of terminology that you used, which is core to what we're talking about today. And Adele, I want to speak to you about the decentralization of money. It's been facilitated by distributed ledger technology. That's the core of it, or the blockchain, which is just another term for the blockchain. But it really does have the potential to redefine how we perceive value and how we transact value. So with this rise in decentralized money or decentralized finance and the potential for that we see with many, many central banks, in fact, most of them all over the world, experimenting with CBDC, which is central bank digital currency, how do you see this space evolving? And what impact could this have on a traditional banks like yourselves?
So what distributed ledger technology has brought to the table is new technology platforms that were not available before. Those of you who know me, I'm more a technologist than a banker, but I've learned some banking terms. At least I now know what a haircut is. Didn't know before. The point I want to make is this new technology innovations allows us to reimagine things that we've done over since the Da Vinci family invented banking years ago, how we do accounting, how we do debits and credits, because at our core, we are still managing T accounts with a debit and a credit. That is still the core of what we do, and what we sell to our customers is trust. Trust that we will keep track of your assets and we'll keep it secure. This new technology unlocks certain innovations that we couldn't do before. For example, one of the beautiful things that I love about this, that very few people really understand, is I can trace the movement of the asset through the ecosystem. This is not a well-known fact, but it is actually very beautiful. And I can put controls in place, because remember now, what I've been telling people is a stable coin in its technology manifestation is a smart contract. Smart contract is just code that I put into the ecosystem about some rules. And so for example, let's say I want to give Standard Bank $1 million, and I want Standard Bank to use that $1 million to go and make sure that they give solar panels to all their clients. I can now codify that condition into that $1 million asset that I'm moving to them. So that locks that condition into that asset, and Standard Bank can only use that asset to go and give solar panels to their clients. That is one, the level of innovation is off the scale here. I always tell people, we have not yet imagined all what is possible, but this is one thing, for example, where I can now codify the rules that I want to move with that asset, and that logic is locked into that asset, and that asset can only be used for those reasons. That's one of the beauties of what this technology unlocks, and which will allow us as traditional financial players to move into the next evolution of the space.
Fantastic. Thank you for that. So, Nkosana, I'm going to ask you a question around the other side of the coin, which is the consumer or the end user or the client. I look at some data, crypto adoption, and I'm using crypto as a proxy for blockchain because that really was the first use case for the technology. But if you look at it, they estimate there are over 5.8 million people, or 9.44% of South Africa's total population, that currently own cryptocurrency. And the adoption rate over the continent is increasing at an exponential rate. And these are very much young, digitally savvy, technology literate people who are seeing the value and adopting this tech. How are you in the bank finding, because I know you do a lot of market sensing, how are customer expectations evolving in this space, and what are you seeing in the market around the recognition of digital assets as real investable products?
Okay, so to start off, I think we've been tracking the flows of accounts to see so what money is flowing into markets where you can buy crypto. And, it's in the billions of rands per month because people are investing, people are trying things out. But when you look at South Africa specifically, you wouldn't kind of understand how fast the adoption is going because the system works, right? So here I can pay anyone through any banking system. I can do an e-wallet. There's all of these pieces of payments and technology and banking that work really well. But if you start to look at other African countries where the system has completely collapsed, Zimbabwe, for example, right? They were in a documentary recently about the gold mafia, right? Where they were using very sophisticated ways to source dollars into their economy, right? Because of sanctions that has been given to them. And if you look at, places around Kenya, for example, right? It's more mobile money based. So you're seeing faster adoption of stable coins there because people are starting to realize that they can get money in a wallet and they can go buy a stable coin and use it to transact with somebody, right? People are starting to work globally for companies overseas where they're looking at, okay, so I get paid in dollars. It doesn't make sense for me to then convert all my money into a local currency that devalues every day. So I'm going to convert my currency as and when I need to use it, but I'll also then buy a stable coin that I'll consistently use. And so, in as much as we would like them to be using our platforms and using our technology, it's starting to happen and it's accelerating at a very rapid pace. And so then the question becomes, what are we going to do about it? We can't actually stop the evolution, but I think there's an element there that the banking sector can kind of bring in, right? because we have sort of formalized financial services. So we can look at things like AML, things like KYC, things like risk management, which is functions of the banking sector that are very proven, that we understand and we have run for a very long time. And we can sort of bring them into that market that can also help adoption, but also consumer protect. Because at the end of the day, we can't really give a customer rails to get into crypto, etc. And at the end of the day, they lose their money or they get involved in some sort of scam. And so, you know, whether we like it or not, this is one of those innovations that are touching everything that we do. And I think it's important for us to then realize that we actually have to partner with this ecosystem to make it more efficient, to make it safer, and to make it a bit more regulated so that we can get a bit more benefit for the people that are unbanked, the underbanked, and also the people that were looking for sophisticated products to start to invest in.
You make such a great point. I think that all of us on this panel recognize that if you don't solve the problem for the customer, they will find a way to solve it themselves. So best we be there and ready to give them real solutions. So Connie, I'm going to ask you a little bit more about the industry as a whole. We're seeing, certainly from the media and from the stories that we're learning, that this blockchain crypto space is finally moving from hype into the mainstream. And although there have been waves of skepticism and hype, the question now is whether this technology, this solution is getting to a level of maturity where banks around the world are starting to sit up and take notice.
So I think some of the experience that we bring to the table that's a bit different from being in a bank is that we run a platform business. So effectively, everyone in the audience is a potential client of ours. So we look at it from a slightly different perspective because the technology is a core enabler for us, but we're also looking at Standard Bank that's running a platform strategy. We're looking at what is RMB doing with their real-world asset tokenizations. We're taking note of what people are doing in the rest of Africa, where you're trying to more effectively and more efficiently distribute things like your government bonds, which is so important for each country's monetary policy management. So looking at it and bringing some points in from what the panel has been bringing to the table is saying, what are we as a ecosystem, as a community doing to contribute to the utilization of this technology? And we've been seeing some interesting movements happening in the market, and I think a lot of the movements have been in the payment industry because liquidity is the core tenet of the capital markets, which our expertise lies in mostly. And we welcome things like Visa now partnering with Solana blockchain and also bringing in partnerships with 500 what they call network banks to facilitate merchant payments across the world, which is very interesting because now they've effectively compressed this flow of cash from a 2, 3, 4 day cycle to a 4-second cycle. Interesting. Take note. We're seeing things like the Stellar blockchain. They have a very big partnership with MoneyGram, effectively revolutionizing the way that remittance payments get done, mostly in Africa. And why is Africa such an interesting place for everyone to bring their innovation to board? It's not because we don't know what we're doing. We actually do know very well what is going on in our industry. We have controls of our currencies. We have controls over our assets as well. It's because we have the ability to adopt technology and leapfrog across it. We are asking the hard questions, but we don't have the holiness around our stacks and so forth that the most of the tier banks have. So it's easier for us to move quicker and more efficient. And I think the core tenet thereof is partnerships. Because what is interesting for me, sitting slightly outside of the industry, is the level of innovation that's actually currently happening within this industry. All of a sudden, we're sitting up, we're taking notice. Oh, there's a bond down on this. There's a new payment solution coming out. And it's bringing in some very needed innovation into this industry that is overly regulated. So you're also spanning or carving your own ways and finding movement in the grey spaces afforded to you as well.
Thanks, Connie. So as you can see, a lot of excitement and experience sitting on this panel. Ian, I'm going to come back to you. There's huge news and a huge development in the industry very, very recently, where JP Morgan just launched this blockchain-based tokenization platform. They call it the TCN, Tokenized Collateral Network. And they recently settled their first trade for the asset management heavyweight BlackRock. And basically what they did is shares in a money management, in this money management fund were tokenized and transferred to Barclays as a security for an OTC derivatives exchange. Yeah. Now, I mean, that is mind-blowing. If we'd looked at this at the beginning of the year, not even last year, none of the big tier one banks were even vaguely ready to start looking at that. How are banks actually really executing on this dream and this vision around the world, and specifically in Africa? You have lots of operations all over the continent. How is Africa going to leapfrog this innovation?
So it's actually what you're saying is JP Morgan did all that, and Connie spoke about partnerships. So we went to all the global banks. That's what's great about banks. We are partnering globally. And JP Morgan, Citi, BNY Mellon, they're all very, very open to work with other banks. Because remember, tokenization today, if you think about the core focus areas for banks globally and in Africa, is custody, institutional grade digital asset custody. I spoke to Northern Trust, Standard Chartered, all the big banks in the world. All the big custodians is busy building digital asset custody capabilities, and regulations are moving, regardless if it's crypto or digital assets, for banks to become that institutional grade custodian providers. That's a core foundational capability. And you spoke about the Boston Consulting Group article. What everybody asks, why blockchain adoption and tokenization specifically, real world financial assets, including derivatives, loan and deposit tokenization. Deposit tokenization, similar to stablecoins, is one of the biggest tokenizations probably globally at this stage, the most successful, and that's tokenization of customers' deposits, wholesale and retail. And I'm not going to say what Standard Bank does, but what I pick up with all the banks and local is, if you've got the custody and you've got the decentralized wallet infrastructure as well as real decentralized digital identity, you have the core foundational components to make sure that it's a secure environment. You don't want a custody with, I don't want to badmouth anyone, but a lot of the wealth families and customers expressed interest to participate in digital assets and funding and liquidity. You can think about the liquidity opportunities here. If you've got a Standard Bank token and you go to by BNY Mellon, you don't just issue in South Africa, but you've got a democratized asset that's decentralized, but public but permissioned. Let me just qualify that. Because the thing is, remember, you've still got AML, KYC, we've got banking licenses. So banks are more ready than what a lot of people think. The big focus on banks is just not crypto. The big focus in banks, because even if you look at the total crypto market compared to, you spoke about that collateral transaction, it dwarfs the whole crypto market. If you look at the size, if I tell you what Standard Bank's derivative book is in dollars, I mean, that's bigger than the global, you know what I mean? It's huge. So you can imagine that 70 trillion that you mentioned earlier is going to be reached very, very quickly.
Absolutely.
And that's where the real focus of banks is at this stage, is to actually tokenize real world assets. The biggest thing, though, is still making sure that the regulatory, the compliance, the AML, the KYC, doesn't matter what of the components that I mentioned you built, we get regulatory approval for all of those. So I think people typically talk to a lot of the banks in the digital space as sleeping giants. I don't know if you've heard that.
Yes.
Like a giant that's fast asleep because they're not moving quickly. But it's not really that we're asleep. It's we've got to tick every single box before we move into a decentralized space. Sorry, that's it. So I think banks are really ready.
Yeah.
There is, even in Africa and South Africa, huge appetite for tokenization across the continent.
Absolutely. Thank you, Ian, for that. Adele, I'm going to jump into sort of an evolution of that, really talking about the rails and the basic core infrastructure. And you happened to mention outside when I just met you that back in your youth, you used to work with Standard Bank on SWIFT. So you understand this concept of rails and financial infrastructure. Now, I'm sure you're aware, but SWIFT recently announced, in fact, just a month or two ago, that it's partnered with Chainlink. Now, what's Chainlink? Chainlink is one of the OGs, the original gangsters of the Web3 world, and they manage oracles. I mean, they are the de facto standard for oracles in the Web3. They're crypto native, they're untainted by special interests, and very importantly, they're blockchain agnostic. So you know where I'm going. So it's all about interoperability. What are they doing? They are creating an interoperability protocol. SWIFT and Chainlink are creating a protocol for people to transact, as you've mentioned, Ian, across blockchains and across infrastructure. So this opportunity to partner is becoming more and more of a reality. And if a behemoth like SWIFT is jumping into this space, everybody is sitting up and taking notice. I'd love your opinion of it. Having run through those corridors, I'm saying run advisedly to where we stand today and the implications that have.
Yes. DLT interoperability is a big topic, and there is big players, like you mentioned, SWIFT playing that is getting into that bandwagon, because the reality on the ground, technically, it's very hard if you've got an Ethereum asset with an EVM virtual machine to translate what's happening there to a Bitcoin network, etc., etc., etc. But as an industry, interoperability is recognized as a key topic, and the Bank of International Settlements has also kicked off a multitude of projects, because I think we as an industry realize there's not one blockchain platform that's coming out or emerging as a winner. There's no one ring to rule them all yet in the space. And I think what we're realizing is that there's going to actually be multiple DLT platforms, and it's really important that you get that interoperability in place. There's big players, and there is industry standard bodies that's actually working on this. I don't think the material is quite there yet, but we've got enough standards. I can bridge already from Bitcoin to Ethereum to Solana to, but what is important, and this is my cybersecurity me coming out, is when you bridge from one platform to another, that you understand and you do it correctly and you lock that asset down. We've seen some hacks where the malicious entity actually focused on the bridge component to extract that value from there. So it is maturing at the moment. There's a lot of scope for it to grow, and there's big players on the market. And maybe just to add, it's not just SWIFT. I don't know if you know, SAP has actually partnered with Circle, USDC, and that gives them the ability to bring in their own stable coin, because SAP is a big player in the technology space in the financial world, and they've now partnered with Circle and with a stable coin, which will allow them to facilitate a lot of use cases which they already facilitate for traditional. So what the point I want to make is you're seeing traditional players in the ecosystem adopting the technology very silently and bringing it in and still servicing the clients. So one of the things I'm witnessing is that we as traditional financial players are actually starting to adopt the technology. We just don't know it all the time.
Thank you. And Nkosana, I want to talk to you about something that Adele has touched on, which is security and risk. Now, baked into the blockchain is the security features of the technology, but we know nothing is immune to risk. As an organization, how can banks effectively manage and mitigate security risks associated with any form of technology, and how are you as an organization viewing that?
So I think Ian mentioned that, one of the key components of the infrastructure is custody, right? And that has to do with a lot of storage of your assets, but also your public and private keys. And so a lot of the vulnerabilities happen in that space, where the wallets that people are using are not very safe. The storage of keys is not very smart. Somebody stored their blockchain keys on a piece of paper, and then those get stolen, or they store them in a machine, it gets hacked, and all of that stuff gets taken out. And I think it's then important to understand that there are partners within the industry that have actually built this technology and they've proven it, and they're constantly evolving it, guys like Fireblocks, etc., that are kind of very trusted in that space. And so it's very important for us to partner, but it's also important for us to then develop those relationships and start to then feed them into our concerns and let them know that, look, here are some of the things that we're struggling with from a cybersecurity perspective, because we've seen these hacks, we've seen these vulnerabilities, and this is where our network might be a bit of a challenge. But I think there's also important is to educate people, of the risks, is to educate people how to use the technology safely, right? People they buy Bitcoin and they leave it in a hot wallet, a wallet that's consistently connected to the internet, and so it makes it very easy for somebody to hack. But if you were to educate them on what a cold wallet is, so that they can keep that currency or asset offline, then it becomes a bit safer. So I think there's components of obviously then feeding into those partnerships, bringing obviously the contextual based knowledge of what are some of those vulnerabilities, and making sure that end to end everyone is educated so that you can eliminate some of those human vulnerabilities.
Thank you. You're singing on my hymn sheet in market education. It's our responsibility to educate the market around how to use all of this tech responsibly. So I'm very cognizant of time. We've got a couple of minutes left, and I'm going to ask Connie to kick off on my last question, but then I'm going to ask all of you to comment on it as well. So really, it culminates in this concept of partnerships or collaboration versus competition. And I think it was this gentleman's question in the front row about, how do we compete with these fintechs? And I'm hoping that out of the conversation today, there's a recognition that you can't go head to head. There needs to be some form of cooperation for us all to benefit from this incredible technology and this wave that certainly is going to be hitting our industry. Connie spoke about Stellar and MoneyGram. PayPal and Paxos have also really gotten involved, and that's massive. Visa, which is another big payment provider or solution. We've got Coinbase, which has invested into Circle. You mentioned Amazon is partnering with Ripple. The stories are endless, and a new one breaks literally every week. So, Connie, I'd really just like to get your view as a sort of a leading fintech in this space as to how best banks and fintechs could partner and what the end game is, what the benefit is of that partnership approach.
Certainly a very interesting question that you asked there, Luisa. I think what I can do is I can hook it on to what you've spoken about around risk. We're all in the banking industry, and believe it or not, our job here is not to reduce risk, comply to AML. We're here to make profits for our clients at the end of the day. And how do we make that profit? It's by taking a risk, a measured risk, and we are paid a fee for that risk that we're taking. If you're custodying assets, that is a risk that you as an organization is taking, you're getting a fee in return for it. Whether you're issuing a bond advising on a working capital solution, you're taking risk and you're getting benefit for that. But that means that you have looked at that risk and you've said, okay, I can facilitate this, but there's components to it that I'm not willing to take on. And I think that's the core of where these partnerships come together, because we all have core competencies, we all have core skills that we can bring to the table. Our core skill is that we are agile, we can work fast, we have a very big development team, but our core focus is building our platform business. I'm not going to do anything else. And your core focus is what you bring to the table. Hence, it can be custody, it can be managing your book, it can be your retail clients' deposits. That is your business, and it should remain your business. And in that, the synergies for partnership is born. And then being flexible around how you can actually bring those partnerships to the table. Hence, is it with a partnership model? Is it a JV? Is it a company that you start together? It's interesting and it's challenging. Get curious about the problem statement and don't get discouraged because it is a bit of a push and a fight to get it through your legal or your compliance team. And I apologize if there's any legal or compliance people in the room. You do a great job, but sometimes it is hard to bring these kind of new contracts to table. So there's so many opportunities. There's so many curious things that we can do together. Let's pave the ways and let's find the means to work on it.
So I'm going to go back up in with Ian. So go, Kosana, from your perspective, this collaboration versus competition.
So I think, this is probably one of the domains where participation and collaboration is what's actually going to bring, faster adoption. I saw a very interesting story in Ethiopia, where Cardano and the government partnered to provide identity on-chain for students, and they could then use that to sort of make sure that their school records are on there. Any documentation that has happened, throughout their school journey is on the platform. But if you think about it from a banking perspective, identity actually is linked to your account. If you don't have an identity document, then you cannot access a banking service, because that's how we've sort of done it from a compliance perspective. And on the continent, you're sitting with about 500 million people that don't have identity, right? So all of a sudden, you can use a public utility that a government is trying to solve for something that's unique to their context, but to start to use that to provide banking services. And even in Kenya, we're seeing that they're starting to take some of those mobile money transactions and using those as credit records on chain, so that you can build a credit history for somebody and then start to give them credit services on maybe more formalized banking channels. And so, I think it's going to be one of those industries where a lot of bits and pieces that we can piece together from public utilities, from public and private partnerships, what is actually going to drive the adoption. And I think it's probably definitely going to be one of those where if we don't adopt, the fintech, if we don't adopt the different network providers, then we will actually be making a mistake to actually create a truly globalized network.
Thank you for that. Adele.
Yeah, so I want to add to that. It's about how do we make this a better place for the next generation. That is actually, and I think that's always the goal. And I'm going to take this one use case, and it's same with data, and it was discussed in the previous panel. I really believe whatever you do from a technology perspective, what is the problem you're solving? That's where you start. You don't start with the tech, you start with the problem you're solving. So the use case I'm going to get, just to imagine this. So what I want you to do all for a moment, if you bear with me, is just close your eyes. And you imagine your grandma, and she's very old, and she's lying on a bed, and she needs to take a certain pill every day, okay? And it's 8 o'clock, and she needs to, and her alarm thingy on her bed is going, ping, it's time for the pill, you need to take your pill. And she reaches out, and she opens her pill thingy, and it's empty, okay? It's empty, she can't take this pill, she's dependent on this pill. Now what it does, it now sends a signal to the pharmacy saying, oh dear, you need to, reissue the prescription. Refill. The pharmacy picks up that signal, their system, let the pharmacist know, please package 5 pills, puts it in, the drone comes along, picks that package up, flows to your grandma's house, wherever that is. The window recognizes the drone. There's communication between the drone and the window saying, do I recognize you? Yes, I'm a drone from the pharmacy. You can trust me. I'm not a bad guy drone. You can open for me. Okay, windows opens up, drone flies in and drops the pill next to grandma. It's 5 minutes later. She can now take her pill, and the drone can even maybe fill her water for her. And in all that ecosystem, for example, there's a DLT platform between the pharmacist and the medical aid and the bank, making sure that when that prescription is filled, the money flows to the right players in that whole ecosystem. So what I want you to leave with here is let's take a step back and think of financial value change, like trade finance. Those value chains, if you take a step, they are cumbersome, they're heavy, they're paper heavy. If we can reimagine them and re-implement them much more eloquently. Imagine if you can transfer home ownership and money within 4 minutes. there's countries that's doing that, where home ownership, from where the seller says, I'm going to sell this property, and the buyer indicates they are interested, that whole process plays out with the actual legal transference of the asset within 4 minutes. That is what I think we need to get to and start imagining. Because next we can launch spaceships and stuff like that.
Thanks. And
I'm going to be very short because I don't have time. But the point is here, if you think about use cases, I'm just going to link what everybody said. If you know what you want to do, if you look at what PayPal did, partnering with Paxos, I love Paxos, I saw them a while ago, I saw the opportunity there. If you have a use case, you understand what your customers want, and you want to grow your network globally, you will go and choose those participants or fintechs. Partnerships is essential. There's a lot of knowledge embedded, like Connie said, they've created this capability. You don't have to go, like historically, buy a technology, spend billions, implement it, and create all these things. All this stuff that's happening on the financial instrument value chain. The cash value chains has already been built. There's a concept that people talk about that's open source.
Yep.
A lot of people don't understand that, so you don't have to go and reinvent the wheel, but you can speed up delivery of these processes extremely quickly, and I think that's where partnerships come. Whether you're going to invest and buy out some of these fintechs is another question, but I think partnerships is going to be fantastic. Some banks might just buy a lot of these things and say, I've got a total ecosystem. Thank you very much. I've got to go.
And I just want to say thank you to everybody for participating in the panel. As you can see, they might look like sleeping giants, but they are wide awake underneath those closed eyes. So we'll watch this space. Thanks, everyone.